Praise the Lord. So our second speaker will be speaking on the effects of the new Nigerian tax laws. Okay. Our speaker is Mr. Austin Adigwe. Permit me just to read his profile. Austin Adigwe. Amen. Austin Adigwe is an accomplished economist and banker with decades of experience spanning finance, public affairs, academia, and consulting. He has worked at the intersection of economic policy, financial systems, and leadership development, offering insight that bridges theory and real-world application. As a lecturer and public affairs analyst, he is widely respected for his ability to simplify economic complex economic and governance issues and relate them to everyday decision-making in business and society. Beyond his professional career, Austin is a prolific gospel music minister and faith teacher, passionate about integrating spiritual principles with marketplace excellence. He speaks compellingly to the business leaders on purpose, stewardship, integrity, and impact, helping them understand how faith can shape leadership, influence, decision-making, and drive sustainable success. His ministry is marked by depth, clarity, and a strong conviction that business is a calling and a platform for service to God and humanity. He is married with 5 lovely children. Please put your hands together this morning as we welcome the next speaker, Mr. Austin Adigwe.
Good morning, distinguished gentlemen and ladies. It's my pleasure to be in your midst this morning, speaking on this important issue, actually a national issue, if not national crisis, as it stands. All right, so we are going to try our best to demystify the new Nigerian tax law, looking at its effect or relevance. Okay, so we know that taxes, to start with, are compulsory levies, right? Please, let's make it very interactive. Taxes are compulsory levies. To that extent, your love for the law or your lack of love for the law doesn't matter. It has to be paid, all right? For direct taxes, you actually can shift the tax incident to the next person or another person. But for indirect taxes, you can avoid it by simply not consuming the good or the service. Okay. Yeah. I don't like to be restricted, but that's okay. I think I understand. All right, so before now, we had separate laws that govern the tax space, all right? But what this administration has done is to integrate all those laws into one document so that at a glance, you are able to understand your obligations under our tax system. So the new tax law or the tax reform bill is not an introduction of taxes in the country. I must start from there. Okay? It's not an introduction of taxation in Nigeria, but just modification of existing tax laws. All right? Now, if you look at maybe the effect or the significance, we have to first of all have a grasp of what the law is saying. Then we can determine what the effect will be. On the side of the government, there is actually the need to improve our tax to GDP ratio, which before 2022-2023 was just hovering around 8%, the lowest in the entire African countries, all right? Because if you say taxes are compulsory levies, and you have a country with over 200 million people, and then you're not collecting up to 10% of your GDP in taxes, it simply means that a lot of inefficiencies have actually been built into the system. So this reform is just trying to address those issues. Okay, so like I'm not speaking on behalf of the government, I'm speaking as someone who has read the law. You know, ignorance is not an excuse, you know, in law. We need to know. What is the significance? Look at in 2024, according to National Bureau of Statistics, Lagos State government made 1.2 trillion naira in IGR, 1.2 trillion. Of that 1.2 trillion, 1 trillion came from taxes, just taxes. So you can understand the magnitude of importance taxes are to the economy. You might want to say, and I will agree, that taxes are also supposed to create social benefits, all right, to us, you and I. Let's leave that one. We'll get to that level. But the fact that a state like Lagos made 1.2 trillion naira from internally generated revenue, all right, as published by Nigerian National Bureau of Statistics in 2024, and of which 1 trillion came from taxes, it gives you an idea of how important taxes are to government. And in that 1 trillion, 705 billion came from personal income tax. You and I, what we pay. Comparing it to Yobe, the same period that made about 5 billion, you see that population in a state is actually golden. If you understand the numbers, where these monies are coming from. All right? Now, federal government on their own part, in 2024, made 9.8 trillion from capital company income tax and VAT. 9.8 trillion. You think the government is going to play with that source? If you are in the position, if you are in their shoes in 1 year, and half year 2025 as published as well, they've already earned 8.8 trillion. So tax is serious business. And no individual should stand in the way of government, because you know what will happen. No, I just need to, I just need to create this foundation so that, by the time we start looking at, I just had to create a slide to guide us. So you appreciate why every government, not Nigerian government alone, every government is passionate about taxes. All right? So I've just given you the significance. All right? To government, we need to raise, the target is 18% tax to GDP ratio by 2027. And we all have to play our role. Don't worry, when you start paying taxes, that spirit of indifference, docility will go away, right? Because anger will replace docility. You will then ask them, what did you do with my money? Very soon, that becomes the slogan. Okay, just for context, I don't know, go to, before we even start talking about the new tax law, let's look at just briefly what used to exist. I believe I'm talking to SMEs. The big corporates can't be here because already they've been paying taxes. They have the muscle to hire accountants, tax consultants, so they don't even need this class. All right? Those they pay will work out, all right, their taxes for them. Can we move to the next slide? Okay, so this, just for that context, you can see Company Income Tax Act of 2004. So it's been with us. We should not think that the new tax law has introduced tax on us. It's been with us. Though the difference now is the reform is introducing technology, is introducing a lot of digital way of doing some of these things, which is going to make it almost impracticable for anybody to evade tax. That's just the difference. All right? So if you take your time to look at the provisions, all right, as at 2004, okay, amended by the various finance bills that we've also had. You see, a small company was defined by just 25 million if your turnover, all right, 25 million, no tax, 25 to 100, 20%, so on and so forth. Okay, I'm not really going to waste my time on this. I'm just putting this up to dispel the idea that there was no tax before. We are just going to start paying tax. This is just an amendment to existing laws. So I don't know, just next slide. Okay, you can also see that personal income tax has always been with us. I just told you what Lagos State government made in 2024. In fact, in 2023, Lagos State government made 444 billion in personal income tax. That was 2023. Buhari/Tinubu, right? There was no new tax law then, but the state government was making as much as 444 billion from personal income tax. So this has always been with us. So this is just like showing us that, look, in the past, your income tax was graduated in this manner. Whatever amount you're earning, the first 300, 7%, so on and so forth, all right? But interestingly, you see, in the old tax law, above 3.2 million, you've already hit 24%, right? You've already hit 24%. So mathematically, you're going to begin to see the improvement that has been made. At 3.2 million, you're already at 24% tax, right? Whereas this new tax law will see where you're going to start seeing the 24%. Move on. We're still on the old. Okay, so you have others like VAT, of course, you know. We've always been paying VAT, all right, 7.5% on the value of goods and services. Now, VAT is indirect tax. This VAT is avoidable. If you think it's too high, avoid that particular good. If you don't buy it, you don't get to pay the VAT, right? So indirect tax is avoidable, but direct taxes, like the first two that I discussed now, you can't even transfer the tax burden to another person. But in this case, value-added tax is on goods and services, all right? And there have always been exemptions. There have always been exemptions to that. I will also explain. Now, another misinformation people have is that business owners pay VAT. We'll get to that. Business owners are just like collecting agents, collect VAT on behalf of the government. Okay, you also have withholding tax. All right, there are services, for example, all these professional services, before you're paid, all right, a 10% is deducted. Your investment, if you're doing treasury bill, apart from maybe government bond, if you're doing treasury bill, the usual fixed deposit with banks, you notice that there is always a 10% that is deducted from your account. That is not an additional tax. It's just like tax paid in advance. Tax paid in advance. We'll break it down, no problem. Let's move on. Next slide. I know we don't have time, so that's why I'm... Okay. So, the present administration felt that there was need for the country to improve its tax to GDP, getting more people, okay, to actually start paying taxes. Getting more people to actually start paying taxes. You won't believe that some are just hearing of this tax for the very first time. And that's why I spent that time trying to, you know, navigate that terrain. Some are saying, hey, they just came and introduced tax on us. We've always been paying tax. Okay? For those in formal sector, Mr. Bakari, he knows at the end of the month how much he gives up in taxes. And just the same with every other person that works in a corporate organization. Okay, so the tax reform bill is in 4 parts. You have the Nigerian Tax Act, which, of course, defines some of the parameters. Who pays tax, how to pay, the rates, the relief that is available, so on and so forth. All right. Then you have the NTAA, which is the Nigerian Tax Administration Act. All right, with it. Now, just as the name suggests, administration. All right, administrative. So this is just how this NTA will be administered. That's what this one is speaking to. So, but for you to have a good understanding of the reform, you have to go through all these documents. So try to summarize. So how will this be applied? Then you also have JTB, which is the Joint Task Board, to harmonize between the federal, now Nigerian Revenue Service, all right, and state internal revenue service. So this defines the relationship that will exist going forward between Nigerian Revenue Service and the various states, all right? Then you also have Nigerian Revenue Service. Yes, the name has to be changed, was changed from FIRS to NRS because of the scope or the addition to their function that the new tax law has now brought. So apart from taxes, every revenue that accrues to the government must come through the Nigerian Revenue Service. There were some revenues that come through customs, right? Duty revenue. You have some from FIRS for your driver's license, number plate. But here, everything must come through Nigerian Revenue Service. So it was important to change the name as well to reflect the new status and the scope, okay, that was being looked at. So you have to look at these 4 documents. And I can assure you that they are easy to understand. Okay? So now let's start. Next slide. I can speak without the slides, but I don't know, whichever works for you. Okay, so fantastic. So there's a reason why I started from imposition of tax. All right? As captured in section 3 of the NTA. There's a reason. On social media today, what you hear is money in your account will be taken, right? You hear all sorts, a lot of things. All right? So that's the reason why I'm starting from here. Now, imposition of taxes or tax is going to be one on profit or gains of any company or enterprise. Your profit is not necessarily isolated in your bank account, true or false? What gets to your bank account are your revenues and also your expenses, right? So the process of computing profit, or what is called accessible profit, will convince you today that the money you have in your account is safe. Yeah, because government is not taxing your revenue. What they are going to tax is your profits. And because you're the first assessor, you have been given the authority to assess yourself through a process called tax filing. When you're filing tax, what you're telling the government is that for this year, these are my numbers, all right? And this is my profit. It's supported with audited accounts. Now, if they have any issue, of course, they will definitely do a lot of adjustments. As we move on, you will see. Because in taxes, we also have what is called deductible, allowable deductions, and also some deductions that are not allowed, even though it will be in your financial records. So, how are you going to, you're going through all these processes, then you're scared that the money in your bank account will be debited. So that's number one, profit or gains of any company. Income of any individual or family. So here you're narrowing it down to an individual now. So for individuals, you're looking at your income, could be personal to you, or income of the family where it is impracticable to distill the incomes into the various, or to the various individuals, Abi, in the family. Now, income arising or accruing due to trustee or estate. I just mentioned this. There are some petroleum profit tax, but that's for big corporates. All right? So go to the next slide. Okay, so now, ascertainment of total income of an individual. The total income is different from accessible income, so we need to know that. So if I pick, what's the name? Sorry, Daniel. If I pick Daniel, for example, the tax authority is looking at Daniel like this, and they are saying the total income of Daniel will be the profit from trade. Probably he's a dancer, probably he's an entertainer, and he also works in a place where he's earning employment income, right? So it doesn't stop there. So profit from trade or business or any vocation, employment income. Now, income from investing activities. The young lady that just left, very excellent. She mentioned that you could actually be on a paid job and also be doing some investments. You could actually be on a paid job and also be looking at other business interests. All right. Now we have chargeable gains from disposal of chargeable assets. This one has to do with capital gain. I'm not going to go too technical, but I'm just mentioning, they say at times idea is just what matters, right? When somebody says something, you say, I've heard this thing somewhere. Even if you don't know what it stands for, you just flow, right? Okay, so that I work with a Zenith Bank does not preclude other income from other sources. If my job allows me to do other small ventures, all right, the total income that the tax authority will be looking at consists of all this. Do you have employment income? If you are in an organized setup, your employer will deal with it, so you don't need to bother yourself much. But your side hustles, the reason why this is so important is because you've also heard that under the Nigerian Tax Administrative Act, banks are required to report certain threshold of transactions done by individuals and by companies. So every quarter, all the banks in Nigeria will send reports to Nigerian Revenue Service giving the names of Nigerians as per individuals that did 25 million and above cumulatively in a month, right? And from your BVN, they will easily link your other accounts, right? No, I'm not trying to create fear. I'm just telling you, because we agree that tax is a compulsory levy, right? So we must also accept that this tax will be paid. Then we begin to then ask, what are you using our money for, right? To know is more important than not to know. All right, so banks are going to report this. If you're also in the corporate world, you run a business, you've registered your business, above 100 million cumulatively in a month, we reported to Nigerian Revenue Service. So tell me, Mr. Bakare works in a bank. He earns salary. Already, they know, because his organization sends his monthly payee to them. But they are now seeing Mr. Bakare's name showing up in Zenith Bank, Providence Bank, as doing 25 million. Are you going to tell them that it's the Holy Spirit that is bringing the money? So it's not a crime, but it simply means that you have other business interests. So while your employer is taking care of employment income, it's incumbent on you now to declare the other forms of what income that you're having, not coming from employment income. That's the point I'm trying to make. So you don't say, oh, I'm working, I'm a civil servant. They know it's the government that are taking my money. Meanwhile, you are trading, not knowing that your name is showing up, all right? Even from a car registration, they pick details from there. Land registration. You say your salary is what? 500,000. But you registered a car worth 40 million. Sir, how? Yeah, they will get the information. When you deploy technology, it's so easy to share information. So just make up your mind that you will pay tax. Just make up your mind that you pay tax. That way you don't have to start hiding this, hiding that. When you hide, you've given blank check. You know what's called blank check? If you give blank check to a tax man, it's not going to be funny. So these are all your incomes. You have to look at them, okay, in their own merits. Next slide. Okay. So this is very important. So that if you are an employer, please, you need to pay attention. If you are an employee and you feel your taxes are going up, please ask for the breakdown, right? How they arrive at your tax. Though for big organizations, they use what is called effective tax rate. And that is kind of a disservice to the employees because, for example, Mr. Bakari lives in a house that he pays 4 million naira rent. I live in a house that I pay 1 million naira rent, right? Now there's rent relief. We might be on the same salary. If his organization had actually called in to know how much he's paying in rent so that they can give him his full relief, maybe his taxes would have been lower than my taxes. But what they would just do is apply the same rate. That's the lazy man's way of doing it. Okay, so for those of us that are workers, I'm starting from workers, then we'll go to the business owners. For those of us that are workers, your gross pay is not what is taxed. If you are working into an organization, they said, okay, we're going to pay 24 million per annum. 24 million per annum, split it into 12. That will give you what? 2 million. Ask that you come with book or biro because we're going to do a lot of drills. So 24 million. That means your monthly pay is 2 million, right? But you observe that each month they will pay you less than that 2 million. Good. Because there are a lot of deductions. Some are statutory. So most of them are statutory. Now, from that 2 million, let's start with that 2 million. From that 2 million, your employer would have deducted, these are eligible deductions, and they are what? Compulsory. They are not optional. Right? So, you start with what? National Housing Funds. And that's 2.5% of your basic salary, right? 2.5%. So, your gross is also not your basic. Your basic will be like 800. So I'm also going to give you a hack that you can also use as you move on to know where to load the numbers if you really want to help probably your staff. So you have, this is taken, we'll give it a certain amount later. Then you also have National Health Insurance Scheme is 5% of your basic salary, compulsory deduction, all right? Compulsory deduction. Then your employer contributes 10% under this scheme, while you, the employee, contributes 3%. You see, all these monies are leaving your gross pay. Is that not true? They are leaving your gross pay. You're never going to have them. Then you have contribution under the Pension Act. Of course, yours is 8%. Your employer will also do 10%. It's still going. Now, at least these ones are statutory. So what this tax law is saying is that you, that is the worker, we're going to give you relief. You see, that 2 million naira income you're seeing is not the taxable income. It's just your gross income. Before we apply the tax rate, we'll first of all remove whatever you've contributed throughout the year. So let's assume you contributed on this line. Let's assume you've contributed 50,000. Write it down. Write it down. NHF, 50,000 is your contribution for the year, right? Are we together? Now let's go. Let's also assume that health insurance, this one is more. Health insurance, let's say this one, you did 150,000 per month. Sorry, for the year. You did 150,000 for the year, right? Now let's come to pension. Pension is your money on retirement. I hope you know that. But this pension is flexible. Pension contribution opens up choices for you. You can choose to stay on the 8%. You can also write to HR to say, please add 10% to the 8% that I'm contributing. Do you understand it? It means that your contribution will be higher. The law says 8%, but allows an individual to increase, but you can't reduce. So I can say, okay, HR, add 20% to my contribution. You're just saving for retirement. All right, so that's allowed. Okay, let's give this pension, let's give it 200. Let's give it 200,000. Now, because the government also wants to encourage people encourage people to get into, house ownership, particularly mortgage for owner-occupier, not for business. In fact, there are loans, I don't know, you should have told them now, because work in the same bank. There are loans that FCMB is partnering with federal government, as we speak, that gives a very low interest, 9.75%. And the tenor can go for as much as 10 years or so. So the whole idea is that the housing deficit, which is so huge, they are trying to see how they will breach it by giving some incentives. So now, if you are taking loan to finance your own house, you will pay interest, right? The interest paid for 1 year becomes your relief. It's your house. So whatever interest you pay to the bank, not the principal, the interest you pay to the bank to service that loan now becomes a relief to you as a worker. Let's say 300,000. Let's put 300,000 here. Let's put 300,000 here. I need to be fast, right? Yeah, I need to be very fast. So now, again, another thing that is not common in our own space is life assurance. We don't do life assurance. That's why you see a family that is doing well today, because there's a breadwinner. You make the breadwinner steps aside, then you've created problem for the society. Those that are in school will no longer finish, right? So government is also trying to encourage Nigerians, apart from motor insurance, take life insurance, life assurance. So that should anything happen to the breadwinner, the dislocation will not be noticed, right? Now, if anybody takes life assurance now, from 2025, whatever premium you pay on that life assurance becomes a relief to you for tax purposes. Does that make sense now? You see, they are doing this to point to where they want you to go to. So if you don't want to pay a lot of tax, you do what? You have to take this. It's deductible. Then, of course, rent relief has come to stay. So 20% of whatever you paid as rent for the year is available to you. Okay, we did not put any amount here, right? Let's put 200. Let's put 200. So your rent relief is 20% of your annual rent, cap at 500. So if you're paying rent anywhere, of course you'll be giving receipt, right? Let's say you're paying rent 2 million. What's 20% of 2 million? 400, right? They will give you 400 relief. They won't give you 500. But if your rent is 3 million, 20% of 3 million is 600,000, right? They will cap it at what? 500. Let's take the entire 500. Now, what you then find, have you taken down this? Move to the next slide. So, both the employer, okay, so I then try to graduate it, but before then, let's just work on that. How much do we have? How much relief do you have now from what we've discussed? 1.4, right? Fantastic. 1.4. What is your gross pay? Your gross pay, 2 million. So it simply means that from that 2 million, they will take out what? 1.4. How much is left? Fantastic. You didn't tell me that I'm coming to speak to professors now. I didn't even. Okay, so what is left is 600, right? Now, I have put this side by side for you to see the beauty of reforms. The unfortunate thing is that in this country, everything is political. I don't support any political party. I don't even love our leaders because they don't love us. Yes, we can stand here and list the many times they've disappointed us. So I can't even vouch for anyone. But this document, as far as this document is concerned, is progressive. It's progressive. Now look at it. Let's look at the old tax law. Under the old tax law, are we together now? How much do you have left? 600, Abi? Under the old tax law, the first 300 of that 600 will be assessed at what? 7%. Can we get that down? Get 7% of 300. That would be like 21,000 or thereabouts. Is that correct? Like 21,000? Fantastic. Now, the second Now, if I take out 300 from this 100,000, how much do I have left? 300. Okay, so the next 300 will go at 11%. Oh, yeah? What's 11% of 300,000? That's about 33. 33 plus 21. 54. Fantastic. So, in the old tax law, for those of us that are saying, we don't want new tax law, take it out. We don't want it. We don't want to hear anything. It means that you will default to the old tax law. Is that not so? Because this is numbers now. You default to the old tax law. That your 600 that is left will be assessed to tax using this rate. And that would have given you how much? 54,000 would have been your tax. But under the new tax law, how much do we even have left? 600. Now, the first 800,000 is at zero, Abi. So you pay no tax. You're not paying any tax. That's the implication. The old tax law, you would have paid 54,000. You are seeing it live. That's what it is. But in the new tax law, your tax is zero. And some people will also tell you, once your income is less than 8, no. It is when your assessable income is less than 800,000 that it will default to zero. This person earns how much? 2 million. 2 million. But after the deductions, this must be a wise person. He's going to take mortgage. He knows interest. That's his house. He's going to take life assurance. He has even called the HR, please increase my pension contribution. You are saving money and paying less. And it's legal. There's nothing wrong with that. But you've seen that under the new tax law now, the first 800 goes at 0% and graduated in that manner. Go to the next slide. Okay, so I wanted to use this as an exercise, but let's do 5 million. Let's do 5 million. Just pick 5 million. Go back to the other slide. Go back to the previous slide. Good. Or everybody, I'm not going to talk. Do 5 million. Now, 5 million is accessible income. You've deducted everything. What is now left is 5 million. Use the old and use the new. Let's see. I'm sorry I'm giving you work to do. I informed Chairman that you should come with Kaku. Okay, you have your phones now. So there is no deductions. The deductions have been done, right? Everything, all those ones have been removed. So what is left is accessible income. 5 million. Let's see. I want to do it under the old and do it under the new. I'm doing this because I'm thinking that probably we'll have business owners here. Most times when you run a class of this nature and you don't actually, engage in the computation, you just forget easily. So do it under the old, do it under the new. Let's see how much you are getting. Because you asked, what is the effect of tax, Abi? And I say you are the one that will answer. So we are gradually answering the questions now. So do 5 million using the old rate. Do 5 million using the new rate. You can share opinion. No, this is not exam. You can share ideas. It's possible when we're discussing, somebody did not really pick a particular part that. Who has finished? What are we getting under the old? 1.2. Fantastic. Write it down. $750 for the new, 1.2 for the old. So let me now ask the question, direct question. What is the effect of the new tax law on you, an employee? What? Gives you more liquidity, correct. Yes? Low tax, Abi? Meaning is progressive. Thank you. Can you see that you are now the one saying the effect? Tax refunds, correct? Though there was also tax refunds in the, but no problem, I take that. So it means that the new tax law will give you, the employee, more liquidity. Because instead of paying 1.2, you are paying 750. It means you've saved that much, 450. In economies, there is what is called opportunity cost. If you had paid it in tax, that 450 would never have been available, okay, to take care of other economic needs. It means you can now meet up more things. Are you not answering the questions yourself? I don't answer questions. All right, so it's very basic. If you are an employer, be very careful so that your staff don't take you up in terms of your deductions. Am I communicating? If you are an employee, be very curious now. HR, can you give me the breakdown? How do you arrive at this task? Let it not be that somebody is just modeling up a particular number, just munch it up and drop it on your account and tell you that this is tax. They may actually remit it to the government, not because they want to take more and do less, but because they don't want to do the work. So find out, did you even give my rent relief? Because I did not see you ask me how much I pay in rent. I did not see you ask me to present the receipts, evidence, you understand? So meaning that rent relief that government has given to you, your employer has denied you that. Is that not true? So you can challenge them. You can go to court. I don't know. I don't know if you can go to court, but you know, this is not to make you tax expert, but it's just for you to know at least the basic things. You should be able to handle them. So that's the summary of how personal income tax will hit us. All right. In a summarized form, you have an idea that there are reliefs to you. Those deductions must be made. Whatever is left is graduated in this manner. That's why I told someone, your salary might be 5 million and you don't pay tax. Yeah, that's a fact. That's a fact. If I go and pick up a house of 140 million, and I'm servicing it, my interest already is 3 million. It's there now, is empirical. You can find from my bank, Abi. You ask me, where is your file letter? I will show you the interest. Every year that I'm paying is 3-point-something million. Net it off from my 5 million. How much is left? Then by the time you do all these statutory deductions, say bye-bye. All right. So let's move on. Okay, so this one is taken care of. So if the slide is with you, you can just try your hands on the other numbers. Move on. Okay, so yeah, okay, I even tried to work it out here, old and new. So there's no need, you've understood all this. Next slide. Okay, so this is your assignment, not here when you get home. When you get home. If you go back to the slide where I was showing those statutory deductions, they were percentages, Abi. Some you see percentage on basic. All right. Some emolument. When they talk emolument, they're talking about your basics plus your housing plus your transportation. So this one is just like a full business. This is what you've offered people. How do you compute your task? This is like working from the scratch. Is that not so? Meaning that you have to look at the person's basic salary. This one will go for National Housing Fund. Now, this is what I was trying to tell you. Can you see that these two are earning the same amount? Are you getting me now? They are earning the same amount. But however, if you look at this, Adiola basic is 21.3 million, right? So I'm moving away from it. Okay. Abiola's basic is 21.3 million, right? But Uju's basic is 5 point what? Do you know the implication? Uju is going to contribute lesser to National Housing Fund. Now, look at it. Transport allowance, 8 million for Adiola, 6.1 for Uju. Now, let's see where Uju is actually doing well. Utility allowance, you can see 14 million. Lunch allowance, 15 million. The implication is that Uju's statutory contribution is going to be very small. And that is also what small tax relief. Is that not true? So you don't find the two of them. They might be in your organization. No, it can't be in your organization. Maybe two different organizations. And they all share data. My salary is 49.7. Oh, your own is also 49.7. But how come my tax was 12 million? I said, oh, my tax was just only 5 million. Those are some of the workings. Okay, so take this one home. At your free time, just try your hands on it. Go back to those percentages, work them out from scratch, all right? This one, and then apply the tax rate. Then go to the next slide. Okay, so you should also be told that not all businesses are going to pay taxes, and not all income will also be subject to tax. So that it depends on where you are playing. For example, if you go into sporting business, sporting business, maybe you're promoting one brand or you are selling Nike, whatever you're doing relates to sporting, you are tax exempt. You're tax exempt. You are only tax exempt, but you are also required to do the other things like filing of your returns. I will come there when I get to the main business discussion. Am I communicating? You are running a church. Like this church, you're tax exempt. You don't need to worry. As long as the income is not coming from another business. So when a church opens a school, educational institutions too are tax exempt. So you are still safe. But when you open a water business or a bakery, that your water business and bakery will be assessed to tax. But whatever coming to maintain the house of God, all right, and keep people's faith focused, it's not going to be taxed. So don't worry, your church will not be taxed. So, and the list are just too many, you see. Cooperative societies, you know them now. Cooperative societies, what they do basically is to protect the interest of their members. So I'm not going to run through this. I'm leaving this with you. Tell those in the diaspora, because I know they are also listening to me, your repatriation to this country is tax exempt, but it has to be passed through the right channel. I know the problem with most of you in the diaspora. You are always looking for rates. Bank rate is lower. Okay, the other side, there's something they call it, all right? Those ones are higher. So if you are in America and you want to bring in $10,000 into this country, you then give the $10,000 to someone in America that will inflow the naira into your Nigerian account. You pay tax on it. That's not repatriation. But when you repatriate that $10,000, the one I know, you can also approach Nigerian Revenue Services for the other channels. The channel that is so clear is when that 10,000 is coming through the banking system, it must get to the correspondence bank, get to central bank, so there is an audit trail, right? That this money is coming from a Nigerian living abroad, right? Then it gets into your account in Nigeria here, is tax exempt. You're not going to pay any tax on that money. However, that money stays in your Nigerian account for 1 month. Bank will pay you interest. Is that not so? Now, that interest, not the principal, the interest will suffer withholding tax, 10%, which is advanced tax. Is that clear now? So, because it depends on how you're looking at it. But the source of that money is diaspora transfer, and it's coming through the right channel, is tax exempt. So, guys, start using the right channels. All right, so educational, okay, we've talked about it. For those that are running schools, you're not going to be taxed. If you're investing in government bonds, you see, this is where we say we have to be very, very intelligent about certain things. I'm looking at where I can put my money that the law says I will not pay tax. I can invest in federal government bond. What's my own? All my income will come to me. It's not taxable. That's the law. All right, so let's move on. You can see export repatriation from official channels. For those of you that do export, you don't have any problem. Do your export, make sure you use your NSP, and let the income come back through the bank. It's tax-free. Is that not good? I was thinking people would be smiling, but all right, so let's move on to the next slide so we don't waste time on this. Okay. Now, so imposition, we've entered the company income tax for business owners now. This is where you need to pay attention. You can see that imposition of tax on profits. There are two forms of business status that we are dealing with here now. Private limited liability and business name. We're not dealing with public limited liability. Those ones, they have money. They don't need to take any tax class, all right? Now, if you are running a business name, I hope you know that there is no distinction between yourself and that business. That business is part of your own identity. In accounting, there's what is called entity concept. That business is different from the owner. That does not suffice for business name. If you're running a business name, your profit will be assessed under personal income tax. Because that business name is seen as you. That is additional income that you're making. Or when you're trading, no business name even. You're just trading, just doing your normal thing. Like you have our brothers in Ladipo. Most of them don't have any registered business name, whether business name or limited liability company. Now, but you also have private limited liability company, in which case you are seen as a distinct personality from the business. Okay, so let's move on. Now, how will the law assess you to tax? You will see that every business will face two things: income and expenditure, right? Now, there is no income that is earned or generated without associated expenses. No matter the kind of business you do. Even content creators, they will buy the equipment, right? Which will now go for capital allowance or depreciation. That's what you call it in normal accounting parlance. They are always very fashionable, meaning that they are spending so much on clothing, right? Am I communicating? Yeah. So, and if you're going for any location, you must get a makeup artist. So before Facebook pays you that money, you have incurred some expenses, costs. Thank you. But the taxman is interested in the income that is coming in. Because the higher the income, the higher the tax, right? So you have to keep your records of expenses. So at the end of the day, what is going to be taxed is that income minus cost of generating the income. Is that making sense now? So you can see that your bank account will not be debited. because your bank account can work out your expenses and your income. No, it's important we note this so that we don't run with that notion that some are even saying they are going to stop their business. No. This is what the law is saying. Your expenses has to be taken off from your revenue. Whatever you have becomes a profit. I know we already know all those expenses. I'm just putting some that we might not take into cognizance. Rent, salary, you know all those ones. So now, remember that when we were talking about pension contribution, we said employers will contribute how many percent? 10%. It's now deductible. You are contributing 10% on behalf of your employee, right? Your employee is contributing 8%. The employer contributes how many percent? 10%. That expense is allowable for tax purposes. You have to remove it from whatever revenue that you have, where you have made contribution on behalf of your employee. All right? Now, if you look at this one, bad debt. Now, the reason why I'm putting this bad debt, at times in business, people fight. We have meetings every Friday, MPL. Customers that are not paying bank loan, we want to there is nothing we don't do to get the money back. But the system has actually provided for bad loans. We call it doubtful debts, bad or doubtful debts. Now, in business, not everybody you give credit will turn up to pay you, right? If you write off that debt, it is allowable deductions from your revenue. So you don't need to fight too much. Fight, but no problem. Don't fight too much. You can write it off as business expense. And tax authority will acknowledge it. They won't disallow it. So you can see, this other lady was also talking about research and development costs, right? So all that you can also write off. You can see. Okay, so next slide. Now, these deductions will not be allowed. Now, what is allowed in your financial account are your straight expense. No problem. You have source documents. You are not lying about it. Your truck, you're a logistics company, your truck in last month was arrested by last man. Whether the driver was right or last man was wrong, nobody cares. The important thing is that you have to pay, right? You paid 1 million naira. It's called road fine. Anyhow you want to define it, road fine. In your financial account is business expense. Because you need to spend that 1 million in order for that asset to start working for you again, right? So it's business expense. But for tax purposes, any penalty, any fine, any whatever that is imposed on you by law is not deductible. You are not in business to be breaking laws. That's what I'm telling you. So why that amount is in your audited account as expense, tax authority will add it back. They will back it out. Now, are you beginning to see the processes? That there is no way somebody will just come and debit your account. Because these processes needs to work itself out. Even after you've done your own audited account, somebody is now looking at it, okay, there was this day you pay 5 million fine for making noise in your business premise. It's fine. Remove it. They will add it back. Add it back to whatever profit you brought to them. So, expenditure of capital nature is disallowed. You know why? Because you're going to be given what's called capital allowance. This camera is going to serve this church for like 10 years if it's properly handled, all right? And technology doesn't overtake this version. Because that's what we do now. Something is working, but you just want the newest version. So you have iPhone 17, all right? That does very little more than the other one, but you just have to go with iPhone 17. Anyway, so what usually happens is if you spend 5 million buying this, it's a long-term asset, all right? It's a long-term asset. That 5 million cannot be taken from your 1 year profit. Is that clear? So if you've done that, they will take it back. This is capital expenditure. You're supposed to depreciate it. All right. Domestic or private, I won't talk much on this. So all your personal expenses that you are making from the business, tax authority will not grant it. Okay? You know you're the owner of the business. Nobody will challenge you now. Bring 2 million, bring 2 million. You take it home and you don't pay, right? You do not check out, but you are the owner. The sales girl will just write, taking my madam. In accounting, it's called drawings, right? So if you bring it as business expense, tax will add it back to you. Because that expenses was not incurred solely for, it's not for exclusively for that business. All right, so because I'm going to leave this slide, I've talked about imposition. Okay. You can see depreciation or impairment. In place of depreciation, they will give you what's called capital allowance. It's not like this is going to last for 5 years. It means that if the cost is 5 million, I will divide the 5 million by 5. That's a straight line method of doing it. So every year we get a cost, part of the cost, Abby. Every year we get part of the cost. But because, again, another church can depreciate this using the reducing balance method. In fact, another church, again, can depreciate using the sum of the digits. Do you know that your Balende church can even use annuity method? So there are several methods. Because of all that confusion, TAS says, no, every depreciation you've charged, I will add it back. Then I will grant you what is called capital allowance, which is uniform. 20% of your qualifying capital expenditure as a relief. Now, when all these things have been taken care of, all your expenses, everything I've been saying is just that your expenses will be taken off your income. Then you arrive at profit. Another journey will now start. Last year, my business made loss. Yes, because when you're making profit, you pay tax, right? When you make loss, you're also given the opportunity to recoup it in the future when you start making profit. So let's assume now that we've arrived at taxable profit, not taxable now. After all these deductions, are we together now? We've arrived at a figure, 2 million. Let's say 20 million. 20 million. When I bring up the fact that last year, I made loss. And of course, I filed. There's no argument. My loss last year was what? 15 million. That 15 million will be taken away from 20 million. How much do you have left? That's what you're going to pay tax on. Does it make sense now? Do you think that with all these processes we've explained, somebody will just go to your bank and see 100 million debiting you as pay tax? Those are just misinformation. All right? Those are just misinformation. Straight. So the tax rate, go up. Okay, so I tried to explain it here. I think we've done everything. This is the business profit that you give them, right? They will add back this allowable expense. All those you're fine. They will remove capital allowance. They will remove your relief, loss relief. For example, if you as an employer provided your employee a car, okay, to perform his or her duties, there is only one thing you can give that you cannot take relief on, accommodation, living accommodation. But if you provided them a car and you bought that car 30 million, right? Now, 5% of the cost of that car will be seen as additional earnings on the part of the employee and relief for the employer. But don't let us go into all those technicalities. That's why you also still need to have a consultant that will help you work out all those areas that you're supposed to get relief. If you don't know, you don't know. You will now pay what you're not supposed to pay. Do you understand it? So we don't make it like a task class. So this one is the flow. So even before this business profit, your bank account is before this business profit too. Do you understand me now? Your bank account is behind it. Meaning you have your bank account before you even look at your business profit. So how will somebody be debiting you when you have not even removed your expenses? Because 100 million flew in, do you know the expenses that I also incurred to get that 100 million? No, so government will give you the opportunity to assess yourself. In fact, you are the first assessor of your business. Okay, so this is the rate. So on that 5 million that is left, right? Are we together now? 30% of it becomes your corporate income tax. 4%, again, will be charged as development levy. So effectively, you're paying how much? 34% of that 4 million. Now, if you think this new tax law is bad, let's look at the old tax law. Because this development levy is replacing all these ones. So instead of having 4 different subunits, we now have just one, development levy. If you look at in the past, tertiary education tax was 3%. NITDA was 1%. Is that not 4%? 0.25 for already NASEN and 0.00 for police trust fund. I don't know why we're still giving police money. But If you look at it, has the rate increased or reduced? Let me tell you the simple truth. The difference between the old tax law and new tax law in the minds of Nigerians is that many people are now in the tax net. Not that those that have been paying before are going to pay more. In fact, for personal income tax, I tell you for free, the people that should be complaining are those that are earning more. You can see the assignment I gave you. By the time you get there, you understand. Those that are earning so much are the ones that will be hit hard. Not those that are not earning much. From 2 million, somebody did not pay tax. But somebody will be telling, once your salary is 2 million, you must pay tax. Tell them, no. It is when your accessible income is more than 800,000. So your gross can be 3 million. After the deductions, you land at 500, 700, 800, zero tax. Okay, so next. No, are you people answering the questions yourself? Okay, so I created these tips for every business owner. If you've been sleeping before, carry your biro. You can't get this in any textbook. Carry your biro and note everything we're going to discuss now. These are the tips. These are your lifelines. Number one thing you must do is obtain your tax ID and show. I believe every corporate account that has account. How many minutes do I have? I'm running out. Let me know. Okay, so this one is given. Now, let me talk about this. Let me talk about some of the important ones. Keep your different business lines separate from each other. Listen to me. This new tax law, do not model up things. Let me give you a standard example. Which example will I give? Good. Let's say I'm a mechanic. So, and the name that I've registered is Austin Auto Works. Mechanics primarily will fix your cars, Abi, and you pay them for services. Is that not true? That's what mechanics is all about. I have a 40 engine, whatever, they fix your car, you pay them for the services. That's my job. But because of the delays that I may be getting, each time I order for parts, because without spare parts, I might not be able to fix some cars, right? I then decided to do what is called backward integration. A mechanic, I now also sell parts. I'm also a major user of my parts. Am I communicating now? So these are two different businesses. I hope you know that. Your mechanic business is different from your spare part business, but they are related. Now, because I have also been lecturing, and I said, well, let me pass this instruction, this information to the next generation. So I have a time that I teach people how to repair cars. How many businesses now? 3. Before now, it was okay for Austin Auto Works to be used as my only account. In running my spare parts, doing my mechanic, and doing my school, right? But with this new tax law, it will not favor you. I have to now break out from Austin Auto Works, the spare parts and the school, right? So I will approach CAC and register Austin Auto Parts. I'm just being very honest. I'm not being disingenuous. It's a different line of business. Because there is a definition of small business using turnover, right? There's every tendency that if I pack all my businesses into one company, entity, I will overshoot that limit, even in 1 month. So I now have Austin Auto Parts. This business will now oversee my transactions in the parts business. Even when Austin Auto Works takes parts, he will pay Austin Auto Parts. That's how to do it. I will now have Austin Auto Training Center, which of course I'll register with the government. If I register that with the government, are you thinking what I'm thinking? It's an educational institution. That's exempt. So at the end of the year, only what goes into my mechanic auto works are what clients pay me from fixing their cars and any other expense around fixing those cars. For example, if I buy parts from Austin Auto Parts, it becomes my expense here, right? It becomes my income at the other side. Okay, so now I have Austin Auto Parts. That will just be for my parts. When I import or buy parts, it flows through the account. When I also sell the parts to myself and to my other mechanics, it flows through that account. At the end of the day, your three accounts may not be admissible for tax purposes. Your mechanic business could do 90 million. Tax exempt. Is that not so? It's a small business. Okay, your auto parts will do like 150 million. First of all, it's admissible. It's going to be subject to tax, depending on your expenses too. You've seen it. It doesn't mean that the 120 million is what they are taxing. So at the end of the day, you would have saved yourself a lot of trouble just looking at the law. 3 RC's number, 3 tax IDs. Yes, that's it. So keep your businesses apart. Those of you that have salons, you're selling hair, you're selling nails, your salon is just to do hair. Is that not so? Selling of hair is a different branch of that business. Anyway, maybe if you combine the two, it will still be within the threshold. But in case if you're doing volume, maintain proper books. This one is by law now. You must maintain proper accounting books. First, it's for your own good. The taxman doesn't want you to keep records of your financial transaction. Yes. So some people are saying, we are not being enlightened, we are not being taught. Who cares? Ignorance is not an excuse in law. Behind the thinking of every taxman, people should default. I will show you the penalties. When you stand before the tribunal, tax tribunal, you'll be telling them that I did not know that I have to do this. So you are advised as a business owner today, you've been advised before, to please keep proper books of accounts. Every financial transaction must be documented. If you think it's so tedious to document, wait until you are told that you don't have records. How do we now assess you? Okay, somebody in the same line of business did 500 million turnover, and the profit is go and pay this tax. Let's see if that will be easier. So, I believe that will not be easy, right? So the best thing is to keep your records of your business. If you do not have accountants, get an accounting software. There are so many of them. Train yourself, train people. See, as a business owner, you must have knowledge of everything. Not small knowledge of everything. Otherwise, your staff will take advantage of you. Document your transactions. Please, Section 102 of Nigerian Tax Administrative Act makes it compulsory for business. And there are penalties. And the biggest penalty is that you cannot appeal if you don't have records. Imagine now that you did not keep your records and they say, come. After 4 years, they will not come to you in 2027 now. It's like in 2030. They will say, guy, bring your books. From 2026, you will not be saying, hey, books, I don't have. Okay, so you've not been paying the proper tax. And they say, go and pay this amount. That is what people are talking about when you have defaulted. They say, go and pay this amount. Then you say, no, I'm not going to pay. You have option to go to tax tribunal. In fact, if you are not satisfied with what the tax tribunal has said, you go to high court. If you are not, you can go up to Supreme Court. That's what the tax law provides. But my dear, you don't have records. What are you appealing with? No, if you approach a tax tribunal, what would you be telling them? I want to appeal this. This is not what I should pay. They now say, okay, so how? How are you appealing it? You say, just appeal, just go ahead and appeal. Do you think that's possible? But if you have your records, there must be something in contention. But you have your records, you open your records to them. In fact, if they come to you, even when you're paying tax and said, we want to see your records, and you don't have it, you're giving them open check. Before you come out of that problem, it's not always easy. Go and ask those that have had issue with tax authorities. Don't even walk yourself into that. Even those that are tax exempt, including this church, keep your records. Not keeping your records is an offense on its own. You are not going to pay tax, so it's not like you're keeping the records so that you use it to pay tax. But you have to keep it. So that's bookkeeping. Let me know when to stop, please. Yeah. Once you've kept your book, please file your returns. Am I safe? Okay, I think it's UPS. It's shutting down. Okay, so file your returns. Now, you can also note this. Everything you're doing from January to December, nobody is interested. Nobody is interested. By December 2026, you would have brought your financial year to an end, Abby. You would then prepare your account. The law says you must file your returns 6 months from your accounting date. Meaning that 30th June 2027, your filing would have been due. And what is filing? Filing is tell us how much profit you have made. See, if you refuse to tell them, who is going to lose? It is you. Now, for those of us that will be selling vatable supplies, if time permits, I will touch on that. Filing of VAT is every 21st day of the month. So you need to have those. You need to have those nitty-gritties of what is expected of you. Now, you are not paying tax, so this is not that you pay tax. Just for you to do something. I keep telling people that compliance is cheaper. It's cheaper for me to comply. See, I don't like the government. I don't agree with them. It doesn't matter. Just comply. The person you don't like also don't like you. So if you are on the other side of the law, he will finish you. Because he will have backing of the law to send you to jail. I'm serious about what I'm saying. And nobody's going to come and say, I'm sending you to jail tomorrow. No. They will give you an amount that you cannot pay. Right? They will give you an amount that you cannot pay. After a while, they'll go to court and get marital injunction and freeze all your assets. Is that not jail? You think it's only when you enter somewhere they lock it up? So, file your returns. Now, please, for those that are selling items that are vatable, items that carry VAT, approach any tax authority. Please do that. Approach any tax authority and make inquiries for 2 minutes. Okay. For e-invoicing. All right. Next slide. Let's see what is there. If it's next slide. Okay, so these are all just offenses and penalties. So please, we can avoid all this. Did you see any offense here for not paying tax? No. But for not registering, for not filing your returns, for not keeping your books. So you're seeing all these qualitative things. I'll wrap up by giving you an idea. For example, if you do not file your returns in 2027 for 2026, taxman will not come to you. I can bet you. They will come to you in 2031 and say, bros, you've not been filing your tax returns. Let me help you calculate your penalty. Not your tax. I'm talking about your penalty for not doing that. The tax will be due June, right? So July is 100,000. Count how many months from August 2027 to December 2031. Maybe 40 months. Multiply it by 50,000 naira. That is for 1 year, 1 year. We now go to 2027, which you did not file in 2028. God help us.
So let's put our hands together again for Mr. Austin Adigwe. Thank you very much. Thank you very much for that enlightening session. I don't know if we have questions. No time I look at that. I don't have questions. I have questions as well because so let's just quickly take the questions. Please, are you stand here so I answer the questions. So please, if you have questions, we just give like 10 minutes for questions.
I can say praise God, right? Okay, so I actually have a lot of questions. So let me just narrow it just to 5. Yeah. Okay, that's fair. So quite a lot has been said. Okay, so quite a lot has been said. So let me start from the first one. Actually, when you were describing the example at the beginning of the person that earns 2 million, and then you went about, talking about deductions and all of that, and it's not, I want to be clear, because that's another thing I was thinking in my mind. If let's assume the 2 million, of course we know that. Okay, so the 2 million is what enters his own personal bank account, 600,000 at the end of the day.
It's 2 million. 2 million enters this account.
So when you say the deduction, what does that deduction mean? Deduction means that he's expected to carry the money by himself to go and pay the insurance companies, like the life insurance or all those stuff.
Okay. So you're referring to personal income tax.
Yes.
What gets into your account is net. What hits your bank account is net. They would have done all these deductions that we're explaining. Okay, but you are not going to see these deductions, in your bank account. Okay, your employer has done all these deductions.
It's 600,000.
Correct.
Okay, that's why it's paying 54,000 in the old law.
Yes.
And okay, fine. So, all right. So the next thing I wanted to ask, in terms of the individuals, because you see, I think one of the problems that people, and let me say individuals, that there are individuals in this country, for example, that don't really work with a company or an organized company. I know some people that work for some people, but they are not structured. They don't have all of this housing something and all of it. They just pay them their money. If I'm going, for example, if I'm working in a company or in a place like that, let's say a private studio, and the owner of the studio just pays me, I'm his engineer, and he just pays me, let's say, 200 or 300,000 every month. He doesn't ask anything. He doesn't, there's nothing. How do I report that kind of, how do I pay such a tax? How do I file my tax in terms of returns or whatever?
Okay, so first off, the studio manager or the owner of that studio that is paying you without deducting tax is already in default. But on your own part, what you got is the 200,000, and you're very sure these deductions were not made, and you did not contribute. So your starting point is also 200,000. These deductions are only going to be made if your employer shows proof that these amounts were deducted from your salary. It didn't get to you anyway.
So, for someone who runs a logistic business, logistics could be either a bike or let's say he has a vehicle that he uses for transport and all of that. And then at a point, the vehicle got damaged. Like you tried to mention, I'm saying this on the perspective of an individual, not a business, a registered business. And, let's assume it's an individual, maybe just calls it a business, which is still treated like an individual. Now, for example, the person now got a gift from a family member or a friend, let's assume something damaged in the car that costs about 500,000 or a million, to do. And then, he was looking for the money. And somebody just gifted him and said, okay, you know what? And repair this thing. When he's filing his return, because these monies are reflective on his accounts. It's not monies that was passed from hand to hand. That kind of money, that gift, because it's a gift, it's not like it's a loan. That kind of money, is it taxable?
No, it's not taxable. But what you must also do, just because of time, we didn't get to all those areas now. But what you must also do, and that's why you have to pay particular attention to how you describe transactions that come into your account, so you don't create confusion. If it's a gift, whoever is sending it should so describe it as a gift. So it is not taxable. Gifts are not taxable. However, if he's giving you the gift, and probably he used this name, because that's what we also do. When you send instruction to banks, they will just use the other person's name. If there is investigation tomorrow, somebody will ask you, this 500,000 was not included in what you reported as your revenue, and you now say it's a gift. If you put yourself in the shoes of the tax man, would you believe him? You won't believe him. But if the description had come in as personal gifts to John, simple.
So gifts are not taxed.
Yeah, they are not taxable. Gift of any sort, they are not taxable. They are tax exempt. So if the truck breaks down in the second month till the end of the year, that first 2 months that the truck worked, how much profit did you make? That's what we're interested in. Leave the other one.
That's from January 2026.
Yes.
Sorry. Let me just leave it at one of the problems I will personally have, let me say myself basically is, in terms of this reporting. Now, I have a small photographer, just freelance guy. I don't even have a shop of my own. I do my thing from my house. I have my small photos I come and do in my house. That kind of thing. And let's assume, I just get freelance jobs. End of the month, maybe everything put together is 500,000 income. I'm not talking about the expenses. I'm not talking about transportation and all of that. Okay, so in fact, because one of the things I want to find out is that now, I think you've also maybe answered it a little bit, is in when you're filing these things, how do like I said, I'm a photographer. Am I supposed to report things like, if I took a course in photography, for example, that cost me about $1 million, am I supposed to be able to deduct that from my
that's training costs.
Yeah, training costs. Yeah. Then also, if I'm filing these things, are there online portals, for example, like the tax ID? One of the greatest bottlenecks people have is going to local government or somewhere in an office to queue for days just to get a tax ID. I still know someone today who has not been able to, because they've been posting it tomorrow. What is the easy way to get a tax ID?
Everything is online. Even the tax ID is online. Filing is also online. Filing is online.
Okay.
I hope their infrastructure will support the kind of traffic that will come, but it's online.
Is screenshot of transactions in and out proof of, for example, receipts? Can it be used as receipts?
Yeah, the starting point is for you to prepare your set of accounts. The major proof of profitability otherwise is your final accounts, your audited accounts, okay? Or your state of affairs. Now, those source documents, screenshots, bank statements, are just supporting documents. They are just supporting documents. And look, but you were able to determine that you made 500 in a day or in a month. That means you've been keeping your records now. If you've not been keeping records, you won't even know what you're making. That's a fact. The truth of the matter is, record keeping helps you. There was a time when people call me, you sub, you just keep subbing. So one day I said, no, let me keep record of what I'm subbing. If you even say sub 500, I will write 500. I will write the name. At the end of the month, I was amazed how much I spent subbing orders. Why? Because I kept record, right? So the following month, you call sub, I say, hold on. Hold on. But if you don't keep records, you keep subbing. And you won't know where your problem is coming from. Does that answer your question? All right.
All right, thank you very much. Any other questions?
Just want to clarify. Thank you for the representation, by the way. Just want to clarify. I am a worker, but okay, so now I just want to go into some small business, like maybe I want to sell tomatoes, and at the end of the year, I know my profit can be up to 600K, but that's just what I want to do, you know. How do I go about, is it, I know less than 800% are probably not paying tax on it, but the most important thing, like from what you're saying, is my record keeping. So that if anybody just looks into my account one day, at least they know that I have something. So that's, I'm asking, is really the most important thing.
Yes.
Not that I'm tax exempt or anything.
Exactly.
Like that.
You just need to keep your records. You see, your employment income, that is sorted by your employer most times. So your side hustles, you may not even need to hire an accountant. Create your own sales book. When you buy, you record. When you sell, you record. When you buy, you record. And you can prepare your accounts in the best way you understand. Knowing fully well that you're not going to pay tax eventually, because the profit won't get to that point where you start paying tax on it. But at least you documented how you transacted. You understand? So you're right. Employment income, but please also, once in a while, confirm that your employer has been remitting your tax. Some people will deduct, not the big organizations, they will deduct tax from your salary and they don't get to remit it to the tax authority. Though if there's any problem, you are shielded in the sense that you can show evidence that you deducted from my account. So it's not my responsibility to now ensure that you remit to the government. But your side hustles, where the problem will come is they know your salary is 2 million, but they are seeing 10 million, 4 million flowing through your account. If you're not reporting those ones, that is under-reporting, and it could get you into trouble. Do you understand? So let's just report. Let's just make up our mind who will pay tax. All right.
Okay. Thank you very much for your teaching, sir. For clarity, I want to mention that bad and doubt is
it's a liable expense, yes.
To any sum, like
It should be reasonable.
500 million.
It should be reasonable. How can your sales be 1 million, then bad debt 1.2 million? Okay, so it speaks to your collection strategy. So everything, reasonability is also key. But I understand what you're going to. So don't go and be writing bad debts of 1 million. You sold goods 1 million, bad debt 1 million. Are you in business to generate bad debt? So it may call for investigation.
Okay, another one is you talked about education businesses are non-taxable. So why do tax officials, why do they come and disturb them? For VAT or for, I don't know, they usually come and, it's always an issue. Bring your books, bring your bank statement, bring your this, bring your that, yeah, this, that. And they frustrate, the business, like, to the extent that, we now begin to think that, because it's a private school, primary, secondary, and a boarding school. So we now had to separate the accounts at some point. At some point, we merged the accounts, and, there's this issue around it.
Okay, so this law says businesses within the educational system or ecosystem are tax exempt. It doesn't mean you should not keep your records. It doesn't mean you should not file. But again, educational services too are now zero rated in terms of VAT. Okay? So you are not even going to charge VAT for the services you render. So your VAT output is going to be zero from January 2026. Meanwhile, you could also have VAT inputs. Now, quickly, I don't know if I have 1 minute to explain this. 1 minute. The school is employing the services of a lot of things in order to teach the school, the students, and so on and so forth. Now, there are some of the things you buy in that you pay VAT on. Is that not? Yes. That's your VAT input. Record it. you have to claim it from the government because your VAT output is zero now, is zero rated. So at the end of every month, 21st of every month, file your VAT returns. Your VAT output is going to be zero, but your VAT input will have something. Maybe you bought an equipment, maybe you bought generator, you pay anything, any VAT at all that you pay in rendering that service, you will claim it back from the government. They may not, but in this case, they will give you because already you are tax exempt.
Okay, so lastly, this is just like a concern for discussion, I don't know. So in a country like ours where, poverty is increasing every day, so increasing the tax ratio, does it won't make us pay that tax. It would want to always exempt the tax because eventually you will see yourself like a poor person and you will not want to pay the tax.
Okay, so the tax rates did not increase. Rather, the tax rates have come down. However, more people that weren't paying taxes before, will now have to start paying tax. The advantage I see there is that Nigerians are going to start speaking with one voice very soon. Because most of us will pay this tax. And you then begin to ask yourself, I'm still providing myself with potable water, security, electricity, and everything. So what am I paying the tax for? You understand my point? So, but in terms of the rates, it's actually progressive now. So the lower income earners are paying less. The people that should be shouting are the people that are earning so much in income. Yeah. Okay.
Okay, so for that school now, I want to ask that, is it advisable to separate accounts for the primary, secondary, and the boarding?
School is school. It's educational services. It's tax
So
exempt. You are tax exempt. Don't let them see. People will bully you if you don't know. That's why I told a friend one time, I said, come, before you reject something, can you please go through that thing? It's not just enough to say, I don't want. No, read it first. Then you come out and say, this part, I don't like. This part, I like. But what has happened with this tax reform is that it was politicized for obvious reasons. So Nigerians just say, I don't want it. Even me, I was part of the people that say, I don't want it. Until I sat down to go through, based on my trainings to go through. And I saw that, how can I see something that is good? And I will say, throw it away. There are issues like VAT now. You see this VAT? There are some items that are not VATable, like pharmaceutical products. All right? They are not VATable. If you get into a supermarket where they have just one checkout, right? You buy drugs, you buy Bonvita, you buy all those things, you buy clothes. There's only one receipt, right? They give you one receipt, 500 and something thousand. They will calculate your VAT based on that 500. Because you're informed, you go back to them and say, no, this VAT means I'm paying VAT on the pharmaceutical products. Medical services, no VAT. You go to the hospital, they calculate it. Even private hospitals, calculate and you see VAT. Tell them no, stand there, they will remove it. You won't pay them that. It's zero rated. But you see, we first of all have to understand it. Abi, we need to know. If we don't know, we'll just take it and go.
Wow, thank you very much. Please, I will share the slides so people will know. So at least you know you won't pay or some things now. Quickly, 500. What you just said about exempt from VAT. I want to just come to church. Sorry. Does it also mean that when a church pays VAT on services, they can file for returns on that VAT?
Yes.
Okay.
Yes.
All right, thank you.
You're rendering spiritual services.
All right, thank you, sir. So my question is about us that have a business name and have an account in the business name and also have personal account. And of course, we have several accounts that we receive money into. Some, you just, because you already have the account number as default, you just send before you realize that this is supposed to be for business and it's going to personal account. So would you advise that we just stick to one account, or how do we undo having like 3-4 accounts even though one of them is just for the business name and others are personal accounts? How do we do?
For the sake of discipline and ease of reconciliation, let transactions that relate to your business go through your business account. And I will advise you, whichever bank you're using, on Monday morning, be there first. Let them give you your internet banking. You know what that will help you do? You will take charge of your narrations. You will take charge of your narrations, because deducting expenses is not what the taxman wants. He doesn't want you to deduct those expenses, right? But if you give instruction to your bank, they will just put personal name there, which doesn't really tell you so much about the transaction, right? But if you have your internet banking, you are the one doing it. 50 liters of diesel. Nobody can dispute it anytime, any year. Diesel is part of your input as a logistics company, right? So when you're seeing 50 liters of diesel in my account, 50 million, I will claim it as expense. But if I'm seeing Mr. Bakari, 50 million, I know that I buy diesel from Mr. Bakari, quite right. But if you're the taxman, I tell you that this is business expense, what would you tell me? If there is any disagreement, you now begin to drag. Keep your source document. Make sure that monies that goes into your personal account, okay, aren't for the business. Every money that goes into your personal account should not be related with your business. However, because you're running a business name, your company, that business name will be assessed under personal income tax, which is your employment income plus whatever profit you've made from the business. Keep in mind, you also pay, you're going to pay personal income tax and company income tax. But because it's a business name, everything is merged together. You may likely pay more.
So thank you very much. I really want to appreciate the presentation and the knowledge impartation. So my question is, okay, well, a few of them have been answered. I would ask, you said some government bonds are not tax.
Federal government, federal state.
Yes. So what type of bonds are these? Because from what I know they do 10% withholding tax almost all the distance. So which particular ones?
Any federal or state government bond is tax exempt. Okay. But if you do treasury bill, they will take that withholding tax. Yeah.
Okay, so that's the thing. Even because I know treasury bill, they take that.
Yeah, I know treasury bill. But don't worry, withholding tax is not death sentence. It's tax in advance. So look at it. If from my investment income, I've suffered withholding tax of 600,000. That's why we call it advance tax. It means that tax authority, they are the ones owing you. Yes, they are owing you 600,000. So by the time you compute your income, and your tax liability then becomes 800,000. I'm not saying to compute. We've computed everything. What you're supposed to pay them is what? 800,000. They will give you a credit of what? 600. How much are you paying? So calm down.
But does it work for people who work with a corporate organization? That's
yes,
the thing.
It
Can
does.
you take the claim?
It does. Yes, it does. Okay. Anybody now that deducts withholding tax, ask for your withholding tax certificate. Please do so. Even banks will deduct money from you. Ask them for the withholding tax certificate, which you're going to use to back up your claim that you've already made advance payments.
Thank you very much for that clarification. The second one, which is also the last one, is in money I get an info, probably maybe just like you mentioned, maybe per annum or monthly, this is a certain amount I earn, and obviously they are this particular amount, and they see a huge inflow. Probably that info is due to investment return or something, and it's obviously a bit huge. And you said, you mentioned that it's likely they look into it that, okay, you claim to be any huge amount. Are you also supposed to declare such?
That's not your income, that's your assets. Money, which is your cash or whatever you have in the bank, is also a current asset to you. It's not income. That's money that is flowing back from wherever you invested it. It's not your income. That is just an asset that is going to generate income. So it lands in your account. All right? It's your previous investment. There is audit trail. All right? And banks has a way of liquidating investment. You will see, you will know. Now, but once that money sits in your account and also begin to earn income, whatever income that follows is what will be taxed. not the amount itself. I don't know if I'm communicating.
So is this investment, are you referring to like investment from like deposits or maybe a property or something you invested in or a business?
Yeah. It will be so clear that your asset is returned back to your account.
Okay.
That principal amount is an asset to you, it's not income. Somebody is raising. So while you're going to her, let me just quickly explain this. You also heard recently that CBN, through federal government, directed banks to charge VAT on money transfer, right? It's very simple. Nobody is charging you on the amount you're transferring. Already in NIPS, if you do less than 5K, it's 10 naira. That 10 naira will be charged 7.5%, which is about 75 kobo. If you do between 5,000 and 50,000, NIPS is 26 naira, right? If you do above 50 naira, NIPS is 50 naira, right? So all those NIP charges will suffer VAT, not the 1 million you transferred, not the 100 million you transferred. It's just the NIPS, 50 naira, then they take 7.5% of the 50 naira. You also suffer stamp duty. We're suffering now.
Okay, so sorry, we just two more questions. I believe there's two more questions. So, do you have any questions? Two more questions. We have one online, so let's take from an online person.
Okay.
Please, he said, please, does Nigeria have a summarized tax book or document he can recommend?
Okay, so probably you're talking about tax textbooks. Is that what that is saying? Or law?
A guide, I guess, tax book or documents.
Don't try to become a tax consultant. We already have too many problems on our head. The only thing, the response I will give, yes, of course, for those that have taken ICANN classes or want to write the exam of Institute of Taxation, there are a lot of textbooks, but the textbooks don't tell you what the tax law is also saying. You have to marry the two together. Yes, you must study to understand. For example, someone who is a pharmacist or a medical doctor, why do you want to start stressing yourself, reading through all those debit and credit? No. If you pick the law, you should be able to understand the parts that concerns you. So when you're speaking with your accountant or you're speaking with your tax consultant, all right, you're not speaking from a point of ignorance. In fact, there's a way you talk, the person will know that you know what you're saying. Imagine you now tomorrow walking into a supermarket where they will batch up pharmaceutical products, agri value chain products, then whatever, everything, you now see VAT. You have to take them up. Please. Every single item is charged, not the total amount. So if you're giving me pharmaceutical product, the VAT there is zero. I want to see it. I want to see how you arrive at this. Well, that's why I say we don't even have the technology. Even the e-invoicing they're talking about, you need data. What is the internet penetration? You need power too. Abi? So we don't have the technology. So at the end of the day, we'll be fine anyway. We'll just be fine.
Thank you very much for the insights. I want to ask, as individuals, how do we get our TIN? Which agency do we go to get the TIN? Then, as companies, like some churches that have been registered for a very long time before the regularization of the TIN with their CAC registration number. So, where do they go to get their TIN?
Okay, so for TIN, I think what the government is even trying to do is to make your NIN your tax ID. That has not been perfected, but you can go to jtb.ng.gov and just register and get your tax ID. You don't need to see. If you go there, it will ask you whether it's individual or corporate. As an individual, click individual, put your BVN. You ask for BVN and NIN. So if there is any tax ID that has been linked to that BVN or NIN, it will pop it up. If not, it will open another page for you to register. It's something you can do under 10 minutes. You don't need to visit any office. The same thing to church, the same thing to company, the same page. You do it and generate your tax ID. Thank you, Chairman.
So thank you. You said JTB dot.
JTB dot, I don't know the one that comes forth, but I know it's jtb.gov.ng or ng.gov, whichever way.
So
if this one doesn't work, change it. jtb.gov.ng or .ng.gov, whichever way.
Okay. Oh, okay.
Exactly.
Thank you very much. I think on the front end, it's not a question, just a comment. Because it went through a lot of people's minds. Even though, we work in this thing already. With the new tax laws, just for education, so we can educate other people, with the new tax laws and the way government is going about it, some people may just feel they will never get to me. They will never with us, it will never work. Do you think there's any the new tax law for the average person in shop business or something? How important should we take? So that's my question.
Okay, so I think what is even important to note about tax laws, whether new or old, is the fact that tax laws are always dynamic. Like they brought out this now. Don't be surprised that before the end of the year, you also see changes being made because they will suddenly realize that the vulcanizer, the pepper seller, all these people, they are not into what you're talking about. All this one that we are speaking is story. Mama does not know what is called revenue. Her own is in her waist. Are you going to meet her and tell her that you did not file the returns? What is the literacy level? I talked about internet penetration because we are in Lagos. The unfortunate thing is that if you are in this country or in Lagos, Abuja, or Port Harcourt, you think that everybody enjoys the same benefit of having internet. Some people, internet is viewed once, maybe 1 month. So where do you think they will find? So I think they will continue to make those changes. But I think genuinely that if you have the opportunity to save yourself and the opportunity to save the whole country, you first of all save yourself. Is that not? Yeah. So you have the information, save yourself so government don't come for your head. Then you can now start saving everybody. That's how I would put it. But I hope I've not spoken like I'm speaking for the government. I have just explained what the law says, not my own word. If you ask me, who wants to pay tax?
Let's put our hands together. Thank you very much. Thank you very much, Austin. So we want to appreciate Mr. Austin Adigwe for his time, and also Mrs. Tosin, even though she's gone. We spent a long time. We've overshot our time, actually. But I want to believe that everyone has had a very educative session, right? I want to believe. Yeah, I believe we've learned a lot today for all of us. So I want to appreciate everyone. I did say it, Austin, please also let him know that the convener also sends his appreciation. The convener of the Kingdom Business School, Pastor Ike, this one also sends his appreciation to the speakers. So thank you very much. God bless you. I believe that's come to the end. I want to thank everyone that has joined us online. Everyone that has come on ground today, please, if you're not, please leave your details. So the next, we can update you of our programs, conferences, business conference, fellowship. We have a lot of conferences that take place so that we can put you on our invite and be blessed. Thank you very much. God bless you. Have a great Saturday.